Good morning, students. Today we are going to learn the second chapter in accountancy. I think you might have learned something about accountancy because we have completed one chapter. In that we have learned meaning and definition of accounting, then the objectives of accounting, accounting cycle, functions of accounting, importance of accounting, then the users of accounting, who are all using that information, then what is the role of an accountant in a business concern. So from the meaning we have understood that accounting is a systematic process of what identifying, measuring, recording, then classifying, summarizing, at last interpreting and communicating financial information. That means the only monetary transactions must be entered, and first they have to identify, then they will measure, then they will classify them in the ledger, then they will summarize in ledger trial balance, and from the trial balance they will prepare the final accounts, and the final accounts will be interpreted and communicated by the users, by the management, and that will be communicated to the users. So that is a systematic process. Now the lesson is conceptual framework of accounting. So before going to learn that first one, identification of financial transactions, we should know some of the concepts in accounting, because with the concepts only we can do the accounting work. So that is called the framework. Without the frame, that the photo may not be look good, or we say that skeleton, it is the framework of a human being. Without that bones, a human being doesn't give a proper posture, isn't it? Shape. So to do the accounting, these concepts are very important. So once again we will just see that first two processes, that one, identifying and recording. Systematic process we have studied, isn't it? Accounting is a systematic process. In that system, the first one is identifying, and they will record that transactions. We know which transactions we will enter. All the financial transactions in the books of accounts. All the financial transactions are recorded in the books of accounts. First they will identify the transactions and they will enter. So that two processes, identifying the financial transactions and recording them in the books of accounts, or we can say recording them and classifying them, these two will be the term bookkeeping. We are going to learn a new term, bookkeeping. From the word itself we can understand that they are going to keep some books, isn't it? So don't write like that, what is bookkeeping, keeping the books, no. So from that one we can understand it is books of accounts. It is a set of books, we can say, that is maintained by the clerk, a bookkeeper. We can call that person, one who is keeping books of accounts are called bookkeeper. So it is the primary stage of recording the transaction. It is the primary stage. In the initial stage, in the beginning, what they do, the bookkeeping, that is called identifying the transactions and recording them. Or we can say recording the transactions and they will classify them. That means that identifying and recording, these two we can say journalizing. The first process is journalizing, and the second process, classifying them under ledger, that is called posting. That is, or we can say that preparing ledger accounts. These two are called the bookkeeping. Bookkeeping includes journalizing and preparing ledger accounts. Or we can say recording the transactions in the books of accounts and classifying them under different head. That is called ledger. So, or they can, in a modern stage, what we do? We are entering everything in a computer. That is what they do. They will just journalize the transactions in the computer. That is called electronic accounting. Understood? Now, we can learn some two definitions of bookkeeping. One is given by J.R. Batley Boy. What Batley Boy says, bookkeeping is an art of recording. It is an art. It is an art of recording business dealings. You cannot say any other dealings, only business dealings in a set of books. It is called what? Bookkeeping. So, J.R. Batley Boy defines bookkeeping as bookkeeping is an art of recording business dealings in a set of books. Business dealings means business transactions. Another definition is given by R.N. Carter. What Carter says, bookkeeping is the science, is telling it is science also. Science and art of. It is the science and art of recording correctly in the books of account. Correctly, not wrongly, correctly in the books of accounts all those business transactions. What we enter? All those business transactions. Which transactions? Of money or money's worth. The monetary transactions are related to money. Money or money's worth. That is the definition given by R.N. Carter. That J.R. Batley Boy says bookkeeping is an art. Here R.N. Carter says bookkeeping is the science and art of. So what Batley Boy says fully? Bookkeeping is an art of recording business dealings in a set of books. R.N. Carter says bookkeeping is the science and art of recording correctly in the books of accounts what? All those transactions, all those business transactions of money or money's worth. Now, I think this one of the very short answer, first one. So, you study this one clearly, okay. Now, the features. Now, we know the meaning and definition. From this, we can derive what are the nature or the features or characteristics. But it is a process of recording. It is a process of recording transactions in the books of accounts. Transactions in the books of accounts. What is the second feature? Which transactions we are entering? Only monetary transactions are entered in the books of accounts. Only monetary transactions are recorded. Third one, it is the primary stage of in the accounting process. It is the primary stage in the accounting process. Then the last one is, it includes, bookkeeping includes journalizing and ledger posting. Okay, journalizing. That means we will prepare the journal entries, that is called journalizing, and ledger posting. From the journal we will post them in the ledger, that is called ledger posting. So it includes journalizing and ledger posting. So that we are recording the business transactions in the books of accounts. We are recording only the monetary transactions in the accounts, and it is the primary stage in the accounting process, and that bookkeeping includes journalizing and ledger posting. Okay, you have understood now. Now we will see the next heading, objectives. Now the objectives of bookkeeping. So we have understood we are not going to do any problems in bookkeeping, but these two process in the bookkeeping, that what is the two process? First two stage, the primary stage, that means journalizing and ledger posting. These two we are going to do problems in the third lesson. So for that it will be very good for you if you listen to this lesson carefully. That's why I am explaining, just you listen. So what are the objectives? Now you have understood the features. Most of the features only will be the objectives. Just listen. So what is the main objective? So all the business transactions must be recorded in chronological order. So all the transactions must be recorded in chronological order. What is chronological order? I have told you, order of occurrence. Order of occurrence. Today some transactions will take place. Then tomorrow some transactions will take place. Yesterday some transactions might have taken place. So which one we will enter first? Yesterday's, then today, then tomorrow, as per the order of occurrence. So that means we should have a complete record, or we have to keep a permanent record of all the transactions that should be recorded in chronological order. Then after recording them, we should find out what? The profit or loss. So it helps to ascertain the profit or loss of the business concern. Then soon after that, what can be ascertained? The financial position can be ascertained. Financial position can be ascertained. Then by this one we can understand the progress of the business concern, whether it is in an improved stage, improving condition, developing stage. Then that bookkeeping will be useful to find out the tax liabilities. Tax liabilities can be calculated. Then many other legal requirements will be there that we can fulfill. We have already learned in the first lesson, legal requirements. Any court of law, if they need our books of accounts, we can file them, submit them. So these are the objectives of the bookkeeping. Now, what are the advantages that we have because of this bookkeeping? That means the primary stage of accounting. So the first one, isn't it? Transactions are recorded systematically in chronological order. So it provides a permanent record. It provides a permanent record. We can have a permanent record of all business transactions. Bookkeeping provides us a permanent record of all business transactions because we record them in the chronological order of occurrence. Then bookkeeping is helping us to get the financial information. because we have financial information, we can say the profit or loss, financial position, all these can be got. All this financial information can be got from the bookkeeping records. Then if they will check the progress, so if there is any deviation, that can be controlled. So it is helping the management to control the various business activities. Understood? Then we are providing this one for fulfilling legal requirements. So what is the benefit of that one? If there is any dispute, this bookkeeping record is provided as a legal evidence. If there is any legal dispute, any quarrel, that quarrel is taken to the court. They have filed a case in a court because of that quarrel or fight. So they will ask for the legal evidence. Sachi we say, isn't it? So this books of accounts will be submitted, surrendered there. So that is acting as a legal evidence if there is any dispute. Then comparison can be done. Comparison. Because all the transactions are entered, we can prepare the profit and loss account, financial position. So we can compare our business documents with the other business documents or the financial information, the final accounts, or various departments books of accounts can be compared, or we can compare 1 year with the other year. This year's profit can be compared with the last year profit, and we can take some remedial action in order to control that. If the expenditure is more, we can take remedial action. So comparison is possible in bookkeeping. Then another one, we can find out the tax liability. The same objectives only is becoming the advantages in different way. Okay, what are the limitations? Any limitations available in bookkeeping? There are some. What are the demerits? The main thing, which kind of transactions are entered? All the monetary transactions are entered. Okay, so since monetary transactions are entered, non-monetary transactions are not entered. Non-monetary transactions are not entered. That is a big problem. That we will learn this one later. One concept, full concept. What is the second limitation? If there is any price level changes, because of the price level changes, many changes might occur in a business organization. This may not be considered at all. Then all the transactions that we enter are historical in nature. What is the meaning historical? Because when we purchase a building, we might have purchased it for 50,000. Then next year, we will deduct one discount and we will show that 45,000. Next year 40,000. But that when we go to sell that particular building, it might be valued around 50,000. So it may not be updated. So only the past date that cost is entered, it is not, that value is not updated. That's why the only cost price, we record only in cost price. What is the meaning cost price? That is the purchasing price. So we record only the purchasing price, not the market price. So all that the transactions that we enter are historical in nature. That means only the past data. That present, what is the actual financial position of this year may not be correct, because we are recording that all the assets in the historical price. That means the cost price what we have purchased, and some percentage will be deducted as depreciation. Okay, cost price less depreciation, that is the book value only will be entered. The market price is not at all considered. So here three limitations are there in bookkeeping or accounting. Only monetary transactions are entered. Non-monetary transactions, example, because of the efficiency of a manager or a director, that business organization can be run efficiently, effectively, and they could produce a large amount of profit. The next year another person might have come, he may not be as clever as the old one, so they may not get more profit. So this cannot, they cannot analyze this one. Why this year this profit from the books of accounts? Why less profit than the last year? Because that efficiency of that director or manager cannot be entered anywhere in the books of accounts, because that efficiency of that manager cannot be measured in terms of money. We pay salary to that manager and the next manager, but it never can be measured in terms of money. So we cannot enter his efficiency in the books of accounts. So that is a big limitation in bookkeeping accounting. Okay, now we will learn the difference between bookkeeping and accounting. We will see the differences between bookkeeping and accounting. So the first basis is scope, its area. So bookkeeping is concerned with recording and classifying. We have studied, isn't it? Recording and classifying the business transactions. Bookkeeping is recording and classifying the business transactions. What is accounting? More than this one, including recording and classifying. Recording, classifying, then summarizing, that is preparing final accounts, that is called summarizing. Then analyzing and interpreting, that management will analyzing and interpreting the business transactions. Interpreting the financial data, we can say. Financial data. It is a part of, bookkeeping is a part of accounting, isn't it? Bookkeeping is recording and classifying the business transactions. Accounting includes this one also, recording, classifying, and also some more thing. But summarizing, analyzing, summarizing only, that is summarizing and the trial balance. Then with the help of trial balance, they will prepare the profit and loss account, balance sheet. Everything will come under summarizing. Then analyzing and interpreting the financial statement. Analyzing interpreting the financial data. First point. What is the second point? Stage. This is the first stage, or it is the primary stage of accounting. Because these two we are doing first, then only other one. So it is the primary stage of accounting. So here, including primary stage, we have some secondary stage. What are the secondary stage? Analyzing and interpreting. Analyzing and interpreting financial data. Okay. Then what is the third point? Nature of job. nature of job. We can say it is routine. Daily they will have some transactions. That is routine. And who will do that work? Clerks. So we can say clerical nature. Clerical in nature. Clerical job. Okay, we say that staff will do. Enter all the business transactions in the books of accounts. Routine means it will come again and again. Repeatedly we will do it. So it is routine, and that job will be done in the, that is clerical in nature means not the accountant does. So this job can be done by a clerk also. That is clerical in nature. What is the third point here? Here the routine and clerical. Here what they do? It is which in nature? It is analytical in nature. They have to analyze. So we can say analytical in nature. Understood? It is clerical and routine in nature. It is analytical in nature. Fourth one, knowledge required. Which type of knowledge is required to do bookkeeping? So here only the basic knowledge is required. Basic knowledge of principles. Basic knowledge of accounting is enough to maintain books of accounts, because only recording and classifying is enough. But here they need the thorough knowledge of accounting. Thorough knowledge of accounting. Full detail. Thorough knowledge of accounting is needed, because they should know all the principles, procedures. Everything should be learned thoroughly. Otherwise, he cannot do this analyzing, interpreting the financial data, summarizing. That means preparing final accounts is very tough. But here they will do only the journalizing and posting. So only if he is able to prepare the journal entries, that is enough. Then easy to post them in the ledger. But here, after posting, they have to add and calculate. That they have to be very careful. Then when writing the amount, he should be very careful. He may not write instead of 54 as 45. Then adding, subtracting, all that work. Then preparing the financial statements, balance sheet, what should be done. Then in profit and loss account, what should be entered. Everything, how many depreciation, whether it is calculated, or that bad debts is calculated and deducted from the sundry debtors. All these must be known thoroughly by an accountant. But here bookkeeper must know only the basic knowledge or principles of accounting. Understood? The last point is skill required. Another one, knowledge, then skill. Skill also. Here this analytical skill, because he has to analyze the records, books of accounts, financial records. So here analytical skill is not needed. Analytical skill is not required. But required, so required. But here analytical skill is required. Analytical skill is required. Understood now? The 5 points. So it is very well I have explained. It is not a book question, but you should know thoroughly. That's why I have explained. Now we will learn 3 terms in accounting. Okay, bookkeeping, you know. Bookkeeping. Then somewhat we know accounting. Now one more thing you have to study, that is Accountancy. This is the subject you are going to learn, isn't it? So it includes, accountancy is a subject, isn't it? Accountancy is a subject, or we can say it is a knowledge of accounting. Accountancy is the knowledge of accounting, because I know that I have that knowledge of accounting. I am teaching to you. So now you are learning. That's the accountancy subject, isn't it? In that subject we have that knowledge of accounting, and this accounting contains the standards, principles. We are going to learn the standards, principles, procedures, policies of accounting. Policies of accounting. So what is the very big term among the three? This accountancy. The first process is bookkeeping. The second one, accounting. So we are going to learn these two, bookkeeping plus accounting. Here also we need some basic knowledge. Then here we need the analytical skill to analyze the financial statement. Here we prepare the financial statement, and we will analyze, and we will interpret them, and we will pass that information to the various users. So all these, so to prepare this books of accounts or financial statements, we need many standards, many principles, or we can say the concept. That principle only we can say concept, everything together, procedures or policies of accounting. All these together we are going to learn. So it is the primary stage, secondary stage, these two. So it is, we can say, bookkeeping is also a part of accountancy. Accounting is also a part of accountancy. Very big thing is accountancy. Inside we can keep accounting, within that one we can keep bookkeeping. So it is a small part, bigger part, the biggest part. Okay, you have understood? You just read the full lesson, listen to my teaching, and afterwards read the book up to this relationship with the bookkeeping, accounting and accountancy. Then learn only one question answer, that is the definition of bookkeeping. Two definitions are given, Batley Boy and R.N. Carter's definition. Read them and study them thoroughly. All the other headings you read and understand. If you have any doubt, you ask me. Thank you, students.